Hi, this is Tony Turner, and welcome to the Market Now as of the market's close on Friday, August 15th. The Market Now is your mini trading lesson that applies to today's markets. The S&P 500 finished nearly flat today after a morning slide as concerns about Ukraine were offset by late-day buying. Today was also options expiration day. The three major U.S. stock indexes ended higher for the week. The Dow rose 0.7% this week. The S&P 500 gained 1.2%, and the Nasdaq climbed 2.2%. Now let's look at three charts that could give us some insight into the week to come. First of all, we're going to look at a chart of the S&P 500 Spider, the SPY. This, of course, is the tracking stock or ETF that closely follows our S&P 500 benchmark index. As we see, on July 24th, we saw a new all-time high on the SPY at $199.06, very close to the 200 mark, and of course that meant for the S&P 500 index it was very close to the 2,000 mark. But the benchmark never made it to those round numbers. Instead, it rolled over and came down, moved down in the following week to about 3% off of its highs, with the market finally recognizing European financial problems, the situation in the Ukraine, and other geopolitical events as upcoming challenges. Still in all, our market caught support here just above 190. We see that it dropped below the 20-day moving average, which is our red line, the 50-day moving average, which is our green line, that it did catch support here right at just over 190. And we've identified 190 or 1900 on the S&P itself right there as support. Was resistance, is now support. So I did draw a trend line. I think last week I said that we couldn't draw really a trend line yet because we didn't know if it was the lows. Turned out to be, at least for this moment in time. And the SPY bounced higher today, closing at 195.72. We had a big day today. Of course, it was options expiration. So the market did regain some of the losses it took on the news about Russia and Ukraine. Again, closing just a couple of ticks higher here on the day at 195.72. Now we can see, we know it was options expiration date. We can see the volume that usually comes in with those days. We can see that the SPY bounced out of its oversold position on the 14-day RSI. That has bounced up back to 50 or a neutral position. So our market is indeed resilient. Now we can see here that we have, if you look left on this chart, you're going to see a lot of consolidation here. The lows of this are right around 196. So 196 on the SPY, or we can call it 1960 on the S&P 500 itself, should offer or may offer pretty strong potential resistance as a lot of trades took place right around that zone. We can also note support down here at 192. Our trend line comes in again just above 190, right around or at 190, 1900 on the S&P 500 itself. Now the question here is, in the coming week, can the SPY return to its 199 and potentially 200 level? I'm thinking that if Russia continues military actions in Ukraine over the weekend, it may not bode well for the market by the first of the week. However, we have no way of knowing what's going to happen yet on that front. If conditions stay relatively calm, I think the SPY could indeed pop back up to its prior highs, and then we'll have to see if it can continue in an uptrend past that. If not, if it rolls over here, then we want to make sure that it stays above 190. As a move below that would maybe indicate another leg down closer to 187 in the 200-day moving average. So all of this is very important as we go into the next week. Our next chart is the PowerShares QQQ. This chart, of course, shows us the ETF that follows the NASDAQ 100 index, the top non-financial stocks in the NASDAQ stock market. The Qs have fared better. Tech stocks usually don't care as much what goes on with geopolitical events, and we can see that that was true certainly in the last week. The QQQ did make a relative new high at 97.51 back here on July 24th. Today it closed, as you can see, very close to that at 97.40. The Qs are trading above their 20-day, their rising 50-day, and of course 200-day moving average. The RSI is headed up here, and the MACD actually moved above its signal line today, and of course that is all above the zero. Technically, this all looks great. Question here now is, will the Qs continue their climb over 98 and continue in an uptrend here in the month of August, or will they have to stop here at this right about 97.50 and move back down to where the 50-day moving average rising is intersecting with our trend line, so that makes it pretty strong potential support. But the word here, the operative word, of course, is potential. So can the Qs here, again, move up, continue their uptrend? That would be very, very bullish. Or will the month of August be too daunting for the Qs, and will it move back down to support at 94? Of course, should it move below 94, that would confirm a small but perhaps potent double top, and the Qs might have to move down toward the 90 area after that and find more support. Our third chart for today is a chart we haven't looked at in a while. This is the Spider Series S&P Oil and Gas Exploration ETF, symbol XOP. We've seen the price of oil, of course, come down in the last few weeks as it normally does this time of year. And also on geopolitical concerns, on the appearing like recessionary environment in Europe once again. Oil doesn't like weakness in economies, and it tends to move down on those kinds of events. We're watching the XOP here, though, and it's moved down. It had a high here back on June 24th at $84. And I should have mentioned earlier, the XOP top components are Green Plains, Western Refining, Valco Energy, Tesoro, companies like that that explore and that have exploration and operations in the oil industry. Again, it made a high on June 23rd at 84. It has moved down since then. Recently, we can see a lot of volume coming into the XOP as it has fallen back down to support in May and April. It's had a lot of actions around this number of, I'm going to call it 73 here. It's caught support there, 72.80, 73. We can see that the RSI moved into oversold territory at the end of July, but right now it's making a bullish divergence. Have to see if this holds. A lot of volume around this. It does matter in Ukraine and Russia. Oil is a very serious commodity there, so we will have to watch that arena and see how it plays out. We could, if I could draw a trend line here, we could draw a trend line down. I'm going to watch the XOP if it can hold support here above its 200-day moving average. If the price of oil starts higher, it's possible in the next week or so that the XOP could move higher back through 75 and back up towards 78. Now, should it roll over and move below 73 and below its 200-day moving average above 72, then of course it would if it rolls over and comes down, it would no longer be a consideration for a long position. Right now, again, just watching it to see how it acts. It's already backfilled off this high it made here, this quick high it made in August. Is backfilling now. See if it starts up or if it just trades in a range here, which of course wouldn't be as profitable as a move up. Okay, so that's what we have with the XOP, and now we'll go on to next week's economic reports. We have no economic reports of note on Monday. Tuesday, we have the CPI, or the Consumer Price Index, housing starts and building permits. Wednesday, we have crude inventories in the FOMC minutes. Thursday, we have jobless claims, existing home sales, and the Philly Fed. Until next week, keep green on your screen. I'm Tony Turner, and this is the Market Now.